Here joining us now to discuss this is former British MP George Galloway, also another George. This is the George Show. George Gammon is an investor and expert on the economy with a very large following, by the way, on social media, especially on YouTube, where I often check him out. Galloway, I'm going to begin with you. You're in Europe. It's finally happening, huh? The masses are pushing back against the all-powerful central banks. What do you make of that?
Well, this is really about Germany not being prepared to shoulder a disproportionate burden from the immediate and midterm and, of course, longer-term devastation caused by the coronavirus. This is a battle of sovereignty. It's a battle between the German government and the supranational European Union authorities. It's one of the good reasons for leaving the European Union, which I'm glad to say we decided to do. We need to get out at the end of the year or we'll be left to shoulder some of that burden. But the overarching point is one that I'm sure George will have a lot to say about, which is how does it translate printing money, giving it to banks, onto Main Street. Wall Street, fine. The City of London, fine. They are brimming over now with QE money. But how does that get down to the small trader, the small businessman, businesswoman, and the worker at the front? How does it get the house painter, as you put it, back to painting houses? How does it get the butcher shop staying open? These are really very tricky questions if you're going to avoid not just inflation, but stagflation, which is a real danger here, with output slumping, jobs disappearing, and yet lots of money around.
It sounds like it's on your side of the court there, George Gammon. Pick it up for us, will you? What do you make of that? And by the way, let me just share something with my audience. One of the very first persons that I heard publicly talk about inflation, and this is like 2 months ago, is Gammon. He was the first one on his show on YouTube to take us through what was going to happen. I mean, it sounds like, is this what you were talking about, what I was just explaining this morning that the Bureau of Labor Statistics put out?
Yeah, I did. And I saw your segment just before we came on where you're talking about food prices. I was referring to that as well. But going back to what George says, I think he makes some fantastic points. So how is this money supposed to get to the average Joe and Jane on the street? And I think there's going to be a big problem with that. The main reason is because the Fed has kept interest rates artificially low at the long end of the yield curve. So since the yield curve is very flat, it doesn't create a big incentive for banks to lend into Main Street because they borrow short, they lend long. So if there's not much of a spread there, they can't make much money with retail banking. So what do? They look at the collateral that these people are bringing to them, potential borrowers, let's say. And you've got the corporate bailouts. You've got the stock market bailout. You've got Wall Street being bailed out. You've got the billionaires being bailed out. So if you're a bank, you're saying, well, who would I rather lend to? Someone on Main Street, or would I rather lend to a billionaire or a corporation or someone that has collateral in the stock market that I know the Fed is going to backstop with all of this money printing? So when you incentivize the banking system and you create this structure where they can't make money by lending to the average Joe and Jane, but they can make a lot more money with a lot more risk, or with a lot less risk, excuse me, by lending to these big corporations. That's why the money will never get down to the people who actually need it.
So what happens then? I mean, if that continues, and for how long, what eventually happens to the system? At what point can, to quote the terms we were using before, the house painter trying to start a small business finally break through? Gammon?
Well, I don't think they're going to get too much of a loan. I think they might be able to get some form of assistance with, like, UBI or helicopter money, MMT, whatever you want to call it, that will allow them to buy the staples, the groceries. But unfortunately, then you get yourself into a situation where we're reducing the amount of supply. The supply of goods and services is shrinking because more businesses aren't creating more jobs. And if you get the supply shrinking while at the same time you have more money going to those same goods and services, you have an increase of inflation in that segment. So what that means is you have deflation in prices of things where you need credit. So car loans, maybe homes, but then the price of food, the price of energy long term continues to rise.
What do you make of that, George Galloway?
Well, for me, helicopter money is the most effective way. Give directly to Joe and Jane, because they'll definitely spend it, and they'll spend it locally on local goods and services. What's happening instead is the money's going to the banks, as George Gammon just brilliantly explained, and those banks are giving it to people who've already got plenty and who are not adding to the purchasing power going into the economy. There's one caveat, though, that maybe George can comment on if we've got time. The QE that we've had since 2008 has not led to inflation.
Interesting.
In theory, if you print money, then you're going to get inflation. That was an ineluctable law until now. But it hasn't happened in practice. That's why QE can become very addictive.
Gammon, can you do that in 20 seconds?
Sure. Well, the reason we didn't get inflation is because the only thing they printed was bank reserves. It stayed in the financial economy. It didn't get into the real economy. So now what we're talking about with helicopter money is the money getting into the real system, circulating with velocity, while at the same time, the amount of goods and services shrinks. That's where you get the inflation that I think will actually be counterproductive if you're looking to try to help the average Joe and Jane.
You can't say we don't have smart people here on this newscast to bring you developments of what's going on in the world. My thanks to both Georges. Gentlemen, look forward to seeing you again very soon.